If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, everybody. Welcome to the new year and to the first stream of the year on the A1 Trading Show. Thank you very much for being here. We got a good number of people already tuned in and ready, locked in for the new year. We've got some interesting moves to start the year, and we've got a lot to talk about what is the fourth year to a bull market that we've been in. If we take a look at the 12-month chart for just a second, just to look at the yearly, you can see that when we look at the S&P 500, you are talking about going into the fourth consecutive year of or this is potentially the fourth year to the bull market. Or is it three strikes, you're out, and we're going to see some give back on what was a pretty remarkable period in the stock market? Last year was sort of the story of the stock market performance. Was we came into the year excited, the idea of a administration that is very pro-business, deregulation, etc. And then we had the not so fun aspects of the administration come in, which is tariff uncertainty. We saw a massive sell-off in the stock market. However, that was just as quick as it happened, erased and turned into a pretty phenomenal end-of-year rally. Last year was a pretty good year in the stock market, followed by or preceded by a couple good years before that. So we've had a really good run in the stock market. And so I think people start to wonder, they start looking at, okay, we've had 3 good years in the stock market back to back of almost 20% every year. That's a really good return. How much further can this thing really run? That's what people start wondering. So I did some research. You guys know I've been working on, if you've been watching the channel, I've been watching or doing some research on our scenario backtests tool. And I want to show you something that I found for the S&P 500. So I'm selecting S&P 500. And what we're looking at here is we're looking at historical average returns given a particular scenario. So what if we said we want to look at a scenario specifically about streaks where the S&P 500, we look at the last 12 months returns? Well, I put together a little research here for you that I'm excited to present to you all. My show and tell today is looking at the last 12-month returns of the S&P 500. By the way, we'll do gold in just a second for you gold bugs out there. Very interesting stuff there. Check this out. So when we look at the S&P 500, and in the last 12 months, full 1 year look back, we did a good bit of study. We did some research for you guys, and look what we found. Okay, so if the last 12 months return was very positive, let's look at positive first. Let's look at the scenarios in which you had a strong S&P 500 return. So last year, I think the S&P 500's return was about 16.5%. Correct me if I'm wrong, but I believe that's generally about where we were, right? So 16.5%, that's a pretty good return for the S&P 500. So what can we expect looking forward this year based on historical data? Well, let's take a look. So we have the last 12 months returning over 15%. What did that generally produce for the S&P 500 going forward? Well, interestingly, we studied 1,400 61 instances where this was the case. And what we found is that the 1-day average return was pretty much negligible. 1 week average return, this wasn't very predictive. 1 month, not very predictive. 6 months out, you're talking about a 3.4% forward return and 7.39% forward return looking 12 months out from that scenario. So let me ask you guys, given that if you have a 12-month return of 15% or greater in the S&P 500, and I would say we were, we could, I think at one point we were up over 20%. I think it was really close to 20% up on the last 12 months. You can see in this case, we had a 5.46% 12-month average return looking forward. So what do we see here? What do you guys see here? Well, before you answer that, let me show you the inverse scenario. What if you have big downward returns? Also, I see a bunch of people asking questions. I will get to them as soon as I can. We will talk about gold. Don't worry, all the gold bugs, you guys relax, take a chill pill. We will take a look at gold in just a moment. We do every single day. Check this out. When the last 12 months are very red in the S&P 500, look at the difference. Do you see? So when you have a down year of 20% or more, the average forward returns start to get real juicy. They start to look really good. Counterintuitive. You know why? Every single time, James, the producer behind the scenes, probably can be my witness to this. The channel comments get nasty when this happens, okay? When the stock market drops a lot, people are so bearish. They're so negative. The world's going to collapse. Whole thing's a Ponzi scheme. Trump or Biden, fill in the blank, whoever you want, is going to ruin the economy, et cetera, right? They get so nasty. People get so just dark and devious and bearish, right? But look at this. The statistics don't lie. When the stock market goes down a lot, it's typically a better bet. If I was not a stock market person and I just never looked at this stuff, not financial advice, but this is my opinion. If I just looked at this stuff never, barely ever, what I would say is the statistics are pretty obvious here. Stocks are a better buy when they're down, and they're not as good of a buy when they're up. Point blank period. It doesn't take a rocket scientist. Look, when the stock market's been up a lot, the forward-looking returns are not as good. When the stock market's been down a lot, the forward-looking returns are very good. Why? Why is this? Because when the stock market's down, nobody wants to touch it. Everybody's scared. Everybody's bearish. And as James put it, very nasty in the comments. People get it's like the simplest stuff in markets, and yet nobody actually does it. Buy low, sell high. Anyways, I wanted to show you this because I thought it was fascinating. And what do you guys think? I don't know. Does that make sense? It's almost too easy. But in actual practice, it's really hard to buy the stock market when it's down because it looks like it's going to fall off a bridge, right? So with that said, let's do gold. What about gold? Interestingly, this is actually fascinating. The gold research that I did found kind of the opposite. Really interesting. Now, by the way, after up years, the stock market still tends to go up. It's just that it seems like the bet is better when the stock market's down, right? Stock market tends to go up most years. Doesn't go up every year, and it can have horrible down years. But look at gold. You ready for this? Interestingly, let's look at the best forward-looking returns for gold. We can sort this by 12 months. By the way, this is a new feature in Edge Finder. It is probably one of my favorite. It's so cool to be able to have this data. I mean, this is game-changing stuff. This is aligning statistics with your trading strategy. Anyways, okay, when the last 12 months return is over 10%, we typically see a pretty strong forward-looking return for gold. So interestingly, it's the opposite with gold. When you have a stronger period of time for gold, it seems to precede a stronger year again. So it's almost like when you have a good year in gold, it seems to continue into the next year. When you have a really good year in the stock market, it continues, but not as much as if the stock market dropped a whole bunch the year before. Then it's a way juicier bet, historically speaking. I don't know. Do you guys find that useful? Was that interesting? That's my research, my show and tell for the day. If that was interesting, if you want more of that sort of stuff, give me a 1 in the chat. I love this stuff. I just could stare at these sort of statistics and studies all day long, because this is the stuff that matters, man. I mean, this is, you want to see something crazy too? You ready for this? I'm gonna last one, I promise. If we go S&P 500, look at this. For people who think macro doesn't matter, look at this. This is insane. Let's go NFP signals, CPI signals, monetary policy signals. Look at this. You ready? This is so, like, macro matters, man. Like, this is proof. CPI year over year, lower than expected. We all know that's a very good signal for the stock market, because it means the Fed can cut rates. Boom. It produces really solid forward-looking returns. NFP jobs report comes in 25% or more above expectations. Strong jobs, boom, produces a very strong forward-looking return. Fed rate hikes. This is interesting, but it actually kind of makes sense. Rate hikes generally precede strong forward-looking returns, while Fed rate cuts actually precede not so great forward-looking returns. Why? Why is that? Well, because typically the Fed's behind the curve. Typically the Fed lags, right? The Fed usually makes their move too late. And so when people are saying, hey, rate cuts are coming, sometimes what that actually signals is that rate cuts are coming and the Fed is too late. The jobs market's already in a problem scenario, whereas they typically hike rates to try and control inflation following a really strong economy, right? CPI higher than expected produces lackluster forward-looking returns, especially in the 1 day to 1 month period. I mean, this is stuff that, again, you can stare at 5-minute candles all day long, but in my personal opinion, this is where edge is built. This stuff, right? And this is, by the way, when you look at these sort of things, that is all baked in to the scoring of Edge Finder, right? Because what it does is it looks at all these statistics that we just got done discussing and is implemented into the scoring matrix that we have here. 2026, Edge Finder is going to the moon, man. That's all I'm going to say. If you don't have a copy of Edge Finder, try it out. We'll drop a link here to our trials. If you want to set up a trial, explore it for 30 days, etc. We'll drop that link here in the chat in just a moment. Okay, so let's move on to some charts. I just wanted to share some research here today for you. Seems like you guys enjoyed that. Thank you for all the ones in the chat. I love that stuff. Okay, so I am still long gold, yes, based on a couple things. Again, some of the statistics that we just got done discussing. We could go back here really quick just for this. Let's go gold. We're going to go price spikes. The other day I bought gold. Part of the reason, not the only reason, because Edge Finder was also bullish, was that you had a down by at 1.5% by 4% in one day. You can see, historically speaking, that generally produces a good forward-looking profile for gold, right? Just keep it simple. Like this scenario backtest could give you, generally, historically speaking, some pretty strong statistics in your favor just by looking at that. Anyways, yeah, there's the trial if you want to check it out, if you want to try out the tool. Gold's pulling back to this support area. I'm perfectly fine staying in longs with gold. Unless we break through the prior day's lows, then I'll stop out and just take a small loss on it. I do like gold to the upside. I still think it has more to go. I think rate cuts are coming. And so, you know, based on what I just got done discussing, my outlook for stocks in 2026 is not negative, but I think that, you know, just the idea of staying super long stocks and that's it, I think that's just not really where I want to be in 2026. I do think that stocks, you know, they've had really good returns and it gets harder to produce those same returns. The market gets more and more demanding. So when I look at the S&P 500, we're sitting here at all-time highs. I don't have a huge position on in terms of SPX. I am long the Russell. I took a long on the Russell position here in the prior trading day, with a stop loss here below the 50% retracement. So I do have a small long position here. I am looking for the Russell to potentially outperform if we do get rate cuts. That kind of lends me into the camp of more bearish on the US dollar, more bullish on the Russell, more bullish on gold. I'm also long NZD USD. So I have the Kiwi dollar longs on right now. So I've got a couple positions so far, primarily positioned for dollar bearishness for now. If something changes, then of course, we adjust. I don't really love the idea of making huge predictions in terms of like, I'm not going to try and say I know what the AI trade is going to do in 2026. I'm just going to ride trends, which is what I've done for years and what I'll continue to do. The New Zealand dollar against the US dollar seems to have broken this downward structure. So I went long on this pullback here with a stop loss below here, this 50% retracement. So let's see what else we've got. But yeah, dollar index itself, you could have a little bit more upside, but I generally think that I remain pretty bearish on the dollar for now. If we can get a poke up into this 98.60, I still think you have some downside here. If not, I will stop out of my NZD USD long position. Bitcoin here, I don't have a lot of conviction on Bitcoin. It's just, for me, it still looks like a broken chart. I just don't have a strong conviction there. What of oil, Nick? Yeah, let's talk oil. So oil's kind of interesting because fundamentally I kind of like oil. Like if I go US oil here, you can see we have a bullish rating on Edgefinder that's poked up. And I do like oil, but I don't like the chart, right? So if I'm looking at oil, this thing, it's stuck in a downward trend. Same with Bitcoin. I can't really get super bullish on this one unless you were to start putting in some sort of higher lows, higher highs. Specifically, I would like to see levels like, let me fix this here a little bit. I'd like to see levels like this get broken to the upside. This 58.50, this downward trend line that we've seen on the longer time frame. Like oil, I do like the macro story in the sense that interest rate cuts could lead to economic, bounce back. But I just don't want to try and predict that. I'm just not seeing any demand come in for oil right now. So unless you get some kind of jump in oil price, I'm not a big fan of longs just yet. Also, we could just take a quick look here at scenarios for oil. I just want to check this. So let's go just all oil. Yeah, so I would personally look for some kind of retracement higher, some kind of move through those highs. But oil is getting a generally bullish reading on Edgefinder. COT data is still very bullish on oil, which I think is interesting. Yeah, US oil here. They decreased a significant amount of short contracts, also decreased longs, but overall they're still slightly leaning bullish. Yeah, I like oil to the upside, but I don't like the chart. So oil is one where I'm like, okay, if I see that thing start to trend higher in 2026, if we start to see, breaks to the upside and key levels of what was resistance turn support, then I could potentially get behind it. So we'll see. We will see. Silver and gold, let's take a quick look at that. So silver is rocketing here. I am not long silver, but I am long gold. I do like gold better of the two right now. But we'll see what happens here. I think gold, you're testing the 20-day moving average, I believe. Yep. And we've so far seen a nice little bounce off of it. So we have prior all-time highs being tested, 20-day moving average being tested. If we draw fibs from this recent kind of pause point here, 61.8% retracement got tested, 50% retracement. So, we had this sharp retrace come back into play. at prior highs. I think if bulls are going to keep going, they'd probably take a stab from here. That's my thought. And that if you break back beneath this, then sellers could maybe take it down to like 4,200 as a next area of retest. So that's where I'm at. I do like gold longs. Going to stick with the trade unless we break through Wednesday's lows. NASDAQ, just take a quick look here. NASDAQ had a really sharp bounce here this morning, although giving back a little bit of those gains here on the 5 and 15-minute candle. I think NASDAQ has kind of this this downward trend line here, trying to be retested again. I think bulls would get interested if they can get back above some of these levels. You have resistance here, that I think bulls want to try and get above. Should I join gold longs now? With complete respect, I say this. If you are going through live streams and just asking, hey, should I go long? Should I go short? Should I close my position? Should I take a loss? Stop what you're doing, please, immediately. Stop trading. You should not be trading if you don't have a planned reason for what you're going to do. Like I'm telling you, save yourself some money and some pain. Stop trading. Demo trade, do a back testing simulation at least. Like, please understand, trading, this is like, it's almost like me trying to get into like onto the football field against a bunch of professional players. I'm going to get killed because I don't know what I'm doing. The markets are the same way. There are professionals, quantitative traders, macro traders, hedge fund managers, banks. Everybody wants money from the markets, right? Who is likely to get that money? The pros. Who is likely to donate their money? People who are just getting in saying, hey, should I buy gold? Should I sell gold? Right? Because they're just going to throw their whole account on something. They don't know what they're doing. They have no reason for taking the trade. They don't know what they're going to do if they're wrong. So please be careful. Don't ruin your 2026 right off the bat by, hey, should I short gold right now? Should I buy gold right now? Don't do that. Just don't. Let me tell you why. If you're looking at gold and you're saying, what should I do? You're asking the wrong question. Ask a different question. Ask, for example, if I go to gold and gold has, let's say that gold drops by 4% tomorrow. If gold drops by 4% tomorrow, should I buy gold? Okay. Gold drops by 4% or more in one day. All right. The 1 day average return looking forward is slightly positive. The 1 week, we're talking about a 1% average gain for gold. Okay, great. There's actually something here. Like, this is what I mean by back testing. Then what do you do with this? Well, you don't know for certain that gold is going to go up, but you have a slight probability that leans in your favor. Okay, cool. If gold drops by 4% or more in 1 day, let me get on my back testing software and study that. How much did it generally fall by when I was wrong? How much did it generally rise when I was right? What size trade should I put on in my account? How should I manage it if it starts moving in my favor? How should I manage it if it starts moving against me? Should I stop out quickly? Should I have a wider stop? These are questions you should be asking yourself. Absolutely never ask the questions, hey, should I buy gold? Hey, should I sell Bitcoin? Right? Because that has no context to it. That even if I said, hey, yes, I'm buying gold, right? You don't know all the details of what I did. And it would be foolish to just copy anyone blindly. Why? Because I have a certain risk percentage on my account. I also have other positions open that may hedge me a little bit from this one portfolio. Maybe you have no idea, right? Maybe I have puts open on gold as well that will help hedge the downside if I'm wrong. I don't, but let's just say I did. If you're just tuning into a live stream and saying, hey, should I be buying this? I'm not trying to criticize you. I'm trying to be very honest with you. or anyone, because you're not alone. People do this all the time in my comment section. Hey, should I buy gold? Hey, did I miss Bitcoin? Should I be buying it? Right? Ask the right questions and you will improve as a trader. Ask the wrong questions and you will lose a lot of money, right? Don't be that person. I'm trying to help you out. I'm trying to be very, very honest with it. Ask the right questions. If I buy gold, what am I going to do if I'm wrong? If I sell gold and I'm right, what am I going to do with it? These are the questions you should ask. Ask thoughtful questions and you will improve as a trader. Ask lazy questions and you're going to lose money. As a trader, I really think that what can sincerely improve your trading journey is asking logical questions, testing, not just trusting what you see on the internet. If you see somebody talking about a moving average crossover strategy and they're promising it's the holy grail, test it. There's nothing wrong with moving average crossovers, but test the theory. Get on a backtesting software. Test these ideas out. Do yourself a favor, right? Take it into your own hands. It's 2026. It's a new year. A lot of people feel that excitement around their trading, but your trading will not get any better in 2026 if you don't get better at actually working on it. Like New Year's resolutions are very cringe sometimes because people are like, new year, new me, but are you going to do anything different in 2026? If you want to improve it, if 2025 was a rough trading year for you and 2026, you're like, it's going to be better this year. How is it going to be better? How are you going to actually improve your trading in 2026? It's not going to magically change calendar year. Oh, it's a new year. It's going to be better this year. If you don't actually put in some work, you've got to seriously test everything in your trading. So just something to think about. Let's see. Nick, can you explain your checklist? What do you look for on Edgefinder? That's a great question. So when I'm looking at Edgefinder, what I generally do is I will use top setups as a general filter. So if I just filter out neutral reading, so I want something that has some conviction on it. I'm looking across all different asset classes because I trade a lot of different things. And I'm saying, okay, NASDAQ getting a bullish reading, SPX, silver, NZD, USD, US oil, and the South African rand against dollar getting a bearish reading. Okay, so with that as my canvas, what do I do next? Well, what I'll do next is I'll look at the indices and I'll say, okay, bullish rating, what is bullish about them? What's getting us there? Well, trend, seasonality, crowd sentiment seems scared, which, by the way, oh my gosh, I don't know if you guys saw that put to call ratio. It shot up straight to the moon. Check this out. So the put call ratio on SPX got like really, really scared. I'm not sure what's going on. It's still loading here. Let's try refreshing it. So crowd sentiment got like really pessimistic in the options market right before the close. Look at this. So put call ratio went parabolic to the upside. What that tells you is there was a huge volume of put demand on the market. So people bought a bunch of bearish bets on the S&P 500. That inherently makes me a little bit more bullish just because people got really bearish, right? So crowd sentiment is really powerful. We also saw this in our studies. I'm not going to do it right now, but scenario backtests generally show that big spikes in the VIX, put call ratio, AAI investor sentiment survey, when people get really scared, it generally produces better forward-looking returns for the stock market, right? So that's baked into our scoring matrix. So what I do when I'm looking for setups is I pull up the top setups page. I look for charts that I trade, and then I'm looking for some strong bullish or bearish reading. Then I take that and I look over to the charts to see if there's a setup for me. So S&P 500 getting a bullish rating on Edgefinder. What I do like is that crowd sentiment's a little bit worried. Trend is still tactically to the upside. Seasonality is strong in January typically. And we have good inflation statistics that kind of generally favor rate cuts in 2026. So I think that is a mostly bullish scenario for the S&P 500. However, I don't really have anything that I can do with it at this current price. So what I'm looking for on the S&P 500 is one of two scenarios. Either we take out these highs and retest into this area, in which case I'd probably be looking for longs, given the Edge Finder score is still strong. The other scenario that I like would be a sharper pullback, and I actually would like this set up better to the 67.50 level, let's call it. Right, so if price comes down to this area, I like that for a possible long side continuation. I think that's a 100-day moving average retest. Yeah, so that would be like a 100-day moving average retest, support zone, longer term upward trend. I'd like that set up quite a bit. But right now I have nothing to do with this. So yes, I have a bullish rating on Edge Finder, but I'm going to skip this one because I don't have any setup right now. And I pretty much repeat what I just did for all the charts every day, and that is my daily trading tasks. Basically, if I wasn't streaming, I enjoy talking about this stuff and spending time with viewers and just discussing markets. But if I wanted to, I could probably be done with this in 10, 15 minutes tops and move on to other things. But I just like the markets too much. So if I'm looking at NASDAQ, for example, same scenario. I'd like a pullback, preferably to this area here. So I do also like the NAS. I think you're in a longer term upward trend here. So this 100-day moving average, if that were to come into play, if we were to shoot lower, to me, that would be a potential trade for me, right? And then if I'm looking at silver, silver's tough because I think it's still a little stretched to the upside. If you were to get a pullback further, or if we just kind of went sideways for a little bit and tested this area, 20-period moving average, that could maybe be something where I take that trade, but I still think it's a little bit stretched. If we take a look at NZD USD, I'm already long this one. So if I go NZD USD here, so I went long on this one on Wednesday. So I have a stop below the 50%. So this was a situation in which, okay, we had NZD USD getting a bullish rating, and we had a couple days down on the currency pair, came down to this area of support, and I went long. US oil, I mentioned this chart earlier, so I like oil to the upside, but not with this price action. So I'd like to see oil price, oil, if it were to be able to like kind of take out some of these resistance points, start moving higher lows, this would potentially be a trade for me. But right now, I just don't like the way we've just been rejecting this downward trend line. So I'm still cautious on oil. And then USD-ZAR, I don't usually trade this one, but let's just look at it anyways. South African Rand, yeah, this one's just trending lower here. So this one, I would need at least like a retracement of some sort, but you know, maybe the 618% retracement. So just not really at a tradable level for me. So that would pretty much be my process for setting up a trade. Keeping it straightforward, I'm looking at my watch list, looking at charts, finding setups, managing risk appropriately, and kind of trying to balance my risk across the different setups and trades that I have currently. I hope that helps answer the question. We are out of time here. I've got my next stream host coming in after this. We have Alan Perez taking over. You guys know him and love him. He is going to be taking a look at some currency setups as well as other markets here for you guys. I'm excited to share the stage with him in just a moment, so we'll have him on. Before we toss the stream over his way, let me just remind you guys, if you're not in our Telegram channel, Alan actually does a wonderful job. He's one of our content writers here who does a lot of these great posts. If you're looking to learn fundamentals for free in 2026, one of the best ways you could do so would be joining our free Telegram channel. Myself, Alan, and Julie, we work to kind of put out content that hopefully helps traders to improve on their macro fundamentals completely for free. We're posting research, analysis, updates on what's happening in markets, trade ideas, etc. So if you're not in there, take a second. The link has just been dropped in the chat, or you can scan the QR code below my camera right there to join the Telegram channel for free. Don't go anywhere. He is up next just after this quick break. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US
Hello,
citizens
hello.
watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good morning, everyone. Good afternoon, wherever you guys are watching. Happy New Year. It's Friday. Super happy to be here. 2026 is going to be very fun. But to the next point, guys, definitely, if things are not clicking, this is a time to go ahead and take a look at it and see what's going wrong and see how we can improve. But I'm very excited for 2026. I'm on the content side of things. I'm going to be more prevalent, more present. So I'm very happy to be on these streams here. Starting off the day though, looking at currency relative strength, we did have the risk assets or risk currencies. So Aussie, New Zealand were taking the lead today, and then we saw euro and pound actually leading as far as the bearish ones. Dollar was pretty stable here. And just looking at the charts here as well. So Aussie dollar showing some relative strength, New Zealand dollar also showing some relative strength. And then we had those two, the euro and the pound, taking some losses there. And then you have your dollar yen kind of trading up there. As far as levels go for the dollar yen, probably looking for 158, 160 area for that intervention territory. I think it's probably the path of least resistance is just a little bit higher getting into those zones, and then you have to be pretty careful navigating those waters once you get up there. Dollar Swiss bouncing off of this level of support here. I didn't like how it was kind of just stagnating here for a little bit. Usually you get those quick reactions to the upside, but now kind of going up a little bit on the day. It was up more. And dollar Canadian, dollar's getting a little bit some steam. Their Canadian dollar was doing pretty well. The Canadian dollar was pretty strong. And then just looking at yields go, sticky, the 10-year yield sticky at that top end there. The long end of the curve is still high as well. And then, yeah, we'll go with more yields later to come. Nasdaq's getting a little bit of a lift off. So we did end the day before New Year's Eve. We ended down 1%. Now we're back 1%. So we're pretty flat there. And then the SPX500, same thing as well. But good morning, everyone. How are you guys doing? Sabi, Happy New Year's, guys. How you doing? What are my New Year's resolution? Well, I have a ton, but one of the things that's relevant to this conversation is just doing more content. That's what would be my biggest thing is learning how to edit better and do like motion graphics and stuff like that. That's been something I'm trying to learn, kind of like on the back end there. So that's one of my New Year's resolutions for trading. Looking very pixely today. Whoa. All right, thank you. Thank you for the compliment, Joshua. I always knew I liked you. Thank you for that. Saying I'm looking handsome now. I knew you were one of my favorites, man. Sup, Alan? What's up with the crazy USD ZAR movement? No idea. Not a currency that I watch, but I'm just curious to see what the chart looks like. USD ZAR. Wow. Couldn't tell you, man. I really couldn't tell you. But yeah, that is a crazy chart. Thank you for telling me about that. All right, so let's go ahead and see what's going on here. As far as news today, not much going on. We do have PMIs, manufacturing PMIs coming out in about 6 minutes here, and then the rest of the day is pretty quiet. So we're going into the new year. Next week is going to be a good one. We have some CPIs across the board, across the ocean, and then we have some more PMIs from the U.S. But for now, starting the year, we do have a little bit of dollar strength, and then one thing too, though. Let's talk about silver here. Such a trickier thing to navigate. If we're kind of using hindsight, super hard to really trade this, right? Because you had like this huge run up and this big reversal, that red candle. Like if I was trading at the moment, I would have been like, wow, this thing's probably gonna taper off a little bit more. Then you bounce back up, then bounce back down, and then now you're kind of up, you're up 2.5% on the day. So going forward, don't really know how to trade that, but what an interesting candle to look at. If you look at I think it's a 12-month chart. Usually when you have those big run-ups, you do have some kind of a correction. So I'm curious to see if that's going to be the case this time. But that's a mean candle. Also, too, one thing I did read at was, let's see, let's go back to the 80s or so. People were saying how silver crazy trade, it's up like 100% or 175% year to date or as of last year. But if you actually look at like the buying power and stuff, I saw this video. If you had bought silver like in the 80s around that time here, let's say you got filled in here, you'd only be up about, well, no, that's actually wrong. I saw a video, my fault, guys, that if you account for the purchasing power and the interest or the inflation, if you would have bought back in like the 80s, you would have been break even, but that doesn't seem to be somewhat the case here. So my apologies there. Alan CME raised margins on metals, which is generally considered bearish. Yeah, that actually is very true. So, um, we're going into this environment where trading is going to be a lot more accessible. Where they're kind of floating the idea of like this 24/7 on equities and stuff like that. And then these assets, the metals have always been somewhat speculative, but they're becoming very, very much more speculative favorites. And so, yeah, that raising those margin requirements for those exchanges typically is as a bearish thing to do. Alan, I was watching one of your past lives during the end of the year and found out you were in the same USD Swiss long. Yeah, Othmain. The basis for the underlying reason was collecting daily income during that slow period, right? And so even if I close the trade break even, that is a win in my case, just because I've been in it for some time now. But um, also, the other reason behind it is that the dollar short trade is a very overcrowded trade, in my opinion. And usually, when the entire crowd is leaning one direction, whenever the trend does tend to shift, if you're early to it, then that's where obviously you're getting the best risk to reward. And that's kind of my idea. But I do have a level off main, this 7,800, 7,500 level to the 7,800 level. If we go ahead and break below that, then I'm just going to ditch the idea, because if you just look at the past here, whenever we do break those levels with a dollar Swiss, particularly, you do break them with full force. And then it's just a matter of like, usually they'll retrace back, but that's a risk in itself, right? If it doesn't pull back, then you're just in those losses. But yeah, collecting income on dollar Swiss. Also, it's a very overcrowded trade. If we just look at the dollar index, this was kind of my last line of defense from a technical basis. So if you just put a fib from low to high here, and then if you look at the, go ahead and mark this up for you guys. You had the dollar traded back up into the 61.8% retracement level, and then below that it was just free game. So we went ahead and broke below and continued trading higher. Then most likely DXY finds itself back at this level of support. And then if you just reference the dollar Swiss, most likely that would have followed suit as well, and then that probably would have taken me out. So that 61.8 was probably the last line of defense. So just looking at that now, if I'm a short player, let's say if I put myself in the position of a dollar short, then I will take this fib from here to here. And then I need to be mindful of these levels here on the dollar index. So you always want to put yourself in the other person's position as well. So once we get to right here, this 38.2% on the dollar index, I need to be careful. I need to see if it's going to be a reaction like this. Same thing with this golden zone, this 61.8 in the 50. So once we get to this level here on the dollar index, then I really have to be careful, because the people that are short dollars will actually, have a chance to kind of take it short from here. So I need to be mindful of those levels as well. So although I am mindful of my thesis, which is long the dollar, and I'm looking at those fibs, I need to be careful of the people that are on the other side of that trade. And so once we get to these levels, if we kind of stall out here or start retracing with some force, then that'll be a mental note for myself to go ahead and cut it off. And because most likely will continue to go, because fundamentally macro, the dollar is in a position, or the path that we can all agree on is that rate cuts are to come. So that's what I'm thinking of in the back of my mind. So when I think of dollar strength, I think of it very carefully, cautiously bullish, as we would say on the channel here. So that's kind of my thought process on the dollar index. We did actually see jobless claims improve what was it, on Wednesday or Tuesday. Now, jobless claims is a weekly print, so it can be kind of noisy here. But if the dollar does, or the US actually does see some kind of improvement in the labor market, then perhaps the Fed can actually target the other side of the coin, which is that sticky inflation. So, also on the topic of that sticky inflation, if we do see that breakout to the upside in U.S. oil, that can trickle into the overall economy, and then we can get, or we can expect to see somewhat of higher inflation. So perhaps that'll make the Fed's job easy, because right now they're tackling two sides. They're tackling the labor, and they're also trying to tackle the sticky inflation. So if one of those improves, hence the labor, then perhaps they can focus on fighting that sticky inflation. Please tell me the apps names. I use the tools that I use when it comes to charting and everything like that. It's Trading View. When it comes to real time data, like just finding the prints, I use Financial Juice. And then for everything else, as far as making decisions and getting a picture as to what things are looking like, I use the Edge Finder. Uh, Pound USD shorts, pound Australian shorts. Let's see. So there's two trades that I'm in. The one that I've been in for some time is the dollar Swiss long, and then I did make this post here on the Telegram channel. But pound dollars is also having some battles of its own. But technically speaking, here, if I would go down to the 1 hour on the pound, if you reference the Telegram post, I did say that we were kind of trading into this channel here, this kind of a channel here, and it was waiting for some direction. Now, on that one day, which was it, on Wednesday, we did see some follow through here. And so if you kind of zoom out here on the 4 hour to kind of better illustrate what I'm talking about, we had this channel here on the pound. Let me see. We had this channel here, and then we also had this trend line here, right? So you can see this upward trend line. And my thought process was, if we go ahead and break below and stay below this, higher time frame trend line, then perhaps we can see some kind of a bearish trade on the pound. And so that's what I'm doing. So we kind of traded back into this, which I love, a break and retest situation. So now it's just a matter of waiting for some more downside momentum. And, sticking to the Fibonacci retracements and how I navigate those. If you are a longer term pound bull, then we'll go to the daily time frame. Oops. We'll go like this. You take it from low to high. It can be one of either of these two, but I'll just do the low to high, like the true one. So then my first level that I would be a buyer if I was a pound long, then it would be this level here or this level here. So the 50 or the 61.8. So ultimately, I'm waiting for one of these levels to get hit. Now, if this is a true uptrend, then that will not be the case. And then you just get stopped out and then you kind of move on from there. But that's kind of my thought process for the pound as far as pullback levels. And then also same thing for the euro, same kind of price action. The euro did break this level. And so now if we go ahead and put a fib from low to high, then you're going to be seeing that the next level of support for the euro dollar is going to be this 38.2% retracement, this 50 or the 61.8. So somewhere around these levels is where I'm looking for the euro or the pound to kind of hit. But again, you don't know for sure, right? So we may get some data that kind of, goes against that idea, and that's okay. That's why we use the tools that we have at our disposal to navigate these markets as cautiously as we can. Can you explain the relationship between the yields, for example, the 2-year? When it comes to interest rates and kind of like the dollar performance, I like to use the 10-year yield. So let's see right here. So usually the bond market will really tell you whether they're convinced of a Fed cutting the rates or not. So if you see the Federal Reserve cutting rates, but then you see things like the 10-year yield that are staying elevated or continuing to trade higher, that's going to mean that the market's actually not pricing in that idea of those Fed rate cuts or future Fed rate cuts. So that's how I use them. Now, as far as what they mean, so depending on like the 10-year yield, the longer end of the curve, that's going to determine interest rates for like your mortgages and stuff like that. So although you see like the Fed cutting rates and stuff like that, mortgage rates and all that good stuff, that's not going to come down if yields don't come down. So, that's something to be mindful of. And I was recently helping my mother-in-law buy a car. We were at the dealership and they were trying to tell us like, oh, rates are going to come down, you can just refinance, stuff like that. And I was telling them like, yields are not really coming down, so you can't really make that argument. But that's just kind of a real world example there. With USD bullishness in the future, yen is likely going to 170 and yen pairs correct slightly. So if we get the idea of those USD getting some of that bullish momentum, you have the risk for Bank of Japan intervention. So Bank of Japan does not want the yen to be super, super weak, right? And so with the USD or USD JPY getting up to these levels, you have that risk of them intervening. And when they intervene, basically means that they're coming to artificially come in and buy the yen to kind of prop it up a little bit. And so you'll see some of these reactions to the downside. One example was September 22. Where was it at here? 2022. So let me go to the weekly. Where are we at? 2022. Oh yeah, right here, October. This was an example that they went ahead and intervened. So they intervened around this area, and then the downtrend continued. If you just take from high to low, it was about 2,000 pips right there. So when the Bank of Japan does intervene, there is somewhat of a follow through with that. But then ultimately, depending on the interest rate divergence between the two currencies, then you'll see either a natural just drift up higher or not. The interesting thing about this case here is that moving forward, the Bank of Japan is looking to raise their interest rates, and the U.S. is actually looking to lower their interest rates, so that interest rate divergence is going to narrow. So I can articulate this better if I just show you interest rate data, interest rate projections, and we're just going to isolate U.S. and the dollar, right? So let's look at the chart first. So over a long period of time, you see that dollar yen drifts higher, right? The reason for that is that people they do what's called an arbitrage, and basically in layman's terms is they borrow cheap money and they park it in higher yielding assets, right? Dollar yen is a good example. Bitcoin is actually another good example, a more recent example. So the yen at the time was the real rates were like negative, so you can borrow the yen for very, very cheap, and then you can just park that into the higher yielding asset. At the time was the US. And when you look at like peak interest rates, the US was very, very high, so you get a very great opportunity to create some good returns there. Now what's happening is that the Bank of Japan is actually looking to raise their interest rates naturally here. So that borrowing cost for the yen is going to actually increase. And then when you look at the US lowering their interest rate, well, that return that they were going to expect is decreasing as well. So then the arbitrage opportunity becomes less attractive. So if you look here, the red is the Japanese yen. They're looking to slightly elevate there. And then the US and blue is actually looking to, lower their rates. So it's definitely narrowing. And so that makes that opportunity, that longer term trend, to be less attractive. Now, when you look at crypto, right? Usually crypto is a very speculative investment, but it's also a very high yielding asset. And that was the case for that Bitcoin decline that we saw here, that this big steep decline. Now it's kind of just chilling here, not doing too much. It's been in this area for some time now. I'm curious to see what happens if we get more like rate hike narratives out of Japan, how sensitive Bitcoin reacts to that. If you get like another headline that Bank of Japan is ready to move one more time aggressively or whatnot, and then you see Bitcoin have a sharp reaction after that, then you see that those two relationships are pretty correlated. Check AUD USD. In that case, why Swiss franc is up? There's no yield gap between the two. Yeah, that's a good point here. So these two are both safe havens, right? So they both really like, or they really flock when there's uncertainty. As far as shorting Swiss yen, that would be actually the most cost effective way of participating in that. But the problem with Swiss yen is that there's no technical structure at all. So that's the tricky thing about it. if I were to short Swiss yen, you would need to see some kind of a very, very obvious break below something like this. With the other charts, like the dollar yen, for example, you can kind of look left and then you see like, this level here, like this, something like that, right? To trade it lower. But with Swiss yen, you don't have that opportunity. It's just a straight chart up. So if I look for that Swiss yen and you're correct on that, the yield gap is very, very thin. So the actual cost of participating would be very, very great. Um, I just need something to really show me that okay, this thing has truly flipped over because this thing is a mean run up, right? So it's running up really, really high. Um, it's a gamble if you just short it right here, because most likely or a very probable outcome is that this thing just rips higher. So you're correct on that, and I think also to your point, if you do see kind of a clean technical flip, then a lot of people or a lot of smart individuals would be aware of that opportunity of like this is a very cost effective way of participating. Then I think people will jump on that trade and then you will see kind of a mean correction. But that's only if you get that break below. Would a JPY intervention be potent since it seems to be coupled with the reduction of the carry trade? I think it would. I think it would cause a big reaction. You have that one time as well, that August 5th sell off where pretty much everything was selling off, everything risk. It was a big deleveraging event, and um, I think there's two things. I think that the markets either didn't really learn from that lesson, right? Because they're pretty just chugging higher, not really paying too much attention, or just there hasn't been any meaningful pullbacks, is what I mean. So there's two scenarios I believe. One is the markets didn't learn from it. They continue, piling money, and you kind of saw that reaction in Bitcoin when you had that mean fade off, or markets, understand now the implications of it and they're participating, more carefully. So I think both things can be true. Yes. So before, this is not the case anymore, Arthmain, but before it was like a standard that I think it was 25% of Swiss francs was backed by gold reserves. I don't think they're held to that rule anymore. Like it's not a solidified rule, but I do think that they still, participate like that. I think a lot of Swiss francs currencies is still backed by gold, and they still abide by those principles. So yeah, Swiss franc is a powerful safe haven. So although I trade currencies predominantly, like whenever you have these safe haven appreciation moments where there's a big risk off event, a lot of people they like straight up trade gold directly, but you can also trade things like the Swiss franc and the yen because they're somewhat correlated in a way, not one to one, but they're somewhat correlated. You're asking for Aussie dollar 1 hour. I wouldn't trade the 1 hour, so I don't know how to best help with that, in my opinion. But if I can give a breakdown onto the Aussie dollar, excuse me, showing some relative strength like the New Zealand dollar, probably going along with the actual overall broad risk on that we're seeing today this morning with the Nasdaq and equities going higher there. Aussie dollar was in the same scenario as the other major currency pairs. What I mean by that is they were hitting a level of resistance and they were also tagging this trend line here. So if you do see something like this on the Aussie dollar, perhaps you get some kind of a short-term pullback into this level. But it's showing that relative strength here. But if I were to trade that like on the 1 hour, don't really have any opinion on it. I mean, we're at this level of resistance. If that DXY level fails to hold and we just continue lower, we break that 61.8, then of course this thing is gonna chug higher. Also, one thing to have on the back of the mind for the Aussie dollar is that they're trying to raise their rates as well. So they kind of flipped hawkish on us. Um, Add that with a dollar that's looking to ease the rates, so that's a perfect storm, in my opinion, for Aussie dollar to continue higher. That is a mean trade higher. One of my bigger regrets was getting out of this trade. I was long New Zealand dollar, long Aussie dollar, and then I just kind of whenever we were chased back into this level, it was a level of resistance in my opinion at the time. So all this to the left or to the right was not there. So I was like, you know what, let me just take my profits. But what a mean run up. But That's the thing with trading. You cannot catch the entire move. So, but yeah, if we pull back, actually, one of like a very active trade that I'm looking to participate in is if Aussie dollar does find its way back up into this level, I'm really, really looking to buy that thing higher. I think Aussie dollar is going to appreciate. It's also going to, if we do have a risk on 2026 and metals continue to flock and everything like that, then Aussie dollar will definitely be a beneficiary of that. Why is the VIX so low? I wouldn't say there's a lot of uncertainty in the market. I think there's a lot of questions, but there's not any real time uncertainties. You know what I mean? Like if there's a real time attack like that Israel Iran that we saw back in, what was it, October? That was a very quick hit of like, oh crap, right? So things like that is what will really move the VIX, or like that August 5th deleveraging event as well. That would really move the needle for the VIX. But I think right now markets are pretty stable. I think they're complacent. I think they're aware of what can happen, but I don't think there's any real time like catastrophic things going on, or things to be very, very careful of or scared of. Any idea why gold has been melting during New York lately? I'm not too intraday. I don't really check or like monitor the performance of assets during certain sessions. I just like to look at an overall, big picture move or broader move. But if I could say anything to that, it's probably just New York is a very active environment, and so I don't know. They're just stepping in. Was there no good movement on Euro US dollar? There was some light trading or some pressure on the US dollar overnight, like around midnight in my time. And now we're just seeing some kind of a pullback here. So um, when it comes to that intraday 1 hour time frame, 50-minute time frame, that's not really what I'm looking at. All I'm doing is trying to find the macro picture, find the best macro setup, and then finding a chart that matches with that. So a really good one that I'm too late to the party on is that Aussie dollar US dollar trade. US dollar is looking to ease rates. Aussie dollar is looking to hike the rates. That's a perfect scenario. The only thing is that this thing has ran up, past me. So, I don't have any. I can't participate. It's too high. Same thing with metals, right? If you're a long term or like a bullish person on gold, what are you gonna do up here? There's nothing to do. You missed it. That's it, right? Like you're not gonna participate because then you have the risk of this thing melting lower. And if you're like, let's say you enter gold right here and you're like, well, I just want to target the highs. Okay, that's cool. But then you have so much risk to the downside here that your risk to reward is like negative. You don't there's no way to participate. It doesn't make sense. It's better to just be patient and wait for a better opportunity. Silver as well, right? You're like, people are now talking about silver when it's too late. You're already at these highs. Or was the conversation back down here, right? I know a lot of us were kind of looking at silver as a proxy to like the catch up trade for gold, which is cool, but now it's too late to even do that, right? Now you're just being or now you're just trading on FOMO, and that's never a good outcome. Bala, happy New Year, man. I didn't see you in the chat earlier. You're kind of late to the party, but happy New Year, man. Hope you're doing good. Hope the family's good. Hedge fund shorting gold, institutions long, big fight. Uh, maybe. 2025 is my fourth year as a trader, and it was a 10.5% drawdown year for me, while 2024 was 20% profit. Do you think that's normal? Also, I mean, what were you trading? It depends. Let's say you're trading, for example, let's say you're trading only the DXY, for example, and you had a 10% down year. Well, you're pretty much in line with the DXY's overall performance of I think it goes down like 10% or 10.5%, something like that. Let's say you were trading silver and silver ended 175% in the green. You also ended 175% in the green, for example. Then you're pretty much in line with what's going on. Now, if you see like the asset that you were trading, like the S&P ended up like sub 20, and you're down 30, well then something's a little bit wrong there. Would you wait for a higher VIX before trading in the direction of no, I wouldn't. I wouldn't cycling. The only reason because is I'm okay with the idea of losing the trade, so I'm not gonna chase it or anything like that. The best opportunities is obviously when you're before the actual move, right? But you can't predict that. So I saw this as a good opportunity. You know, it's relatively cheap. You have the upside, you have the income side to it as well. You had the DXY, you know, staying somewhat elevated off of that 61.8% retracement level. There's the other side to the coin is that the Fed just continues to ease rates, and in the very near term, or they kind of inflict those headlines in there, and then I'm gonna be dead wrong. But that's the risk that I'm taking when you're early to a trade, when you're early to an idea. That is always something that you have to be mindful of. Can I buy now? No idea, man. One thing about day trading is that sometimes huge intraday moves can happen for absolutely no reason. They absolutely have a reason. Um, Also, too, like some assets are not meant for intraday trading. Like Forex, for example, like scalping Forex, that's very hard. I've tried doing it before way early on. They're very efficient markets. You know, when you're usually scalping something, you want to find like a very inefficient market that you can take advantage of. So, uh, depending on what you're trading, scalping or day trading may be easy, may be hard. It just depends. Forex sucks intraday, ES and gold, perhaps. But longer term stuff, I think Forex is pretty good because you get these mean reversion moves. No Fed cuts. It depends. Joe, depends if the labor market starts to improve significantly, then the Fed can address the other side of the mandate, which is, you know, that, well, not the other side of the mandate, but they can address the other side that they're dealing with, which is that inflation. So there's two things that the Fed's worry about is that sticky inflation and the labor market. It seems like right now they're tailored more towards saving the labor market in the near term, and so that's why they're willing to cut the rates. You know, we were having some somewhat wobbly labor data there, but given that we could see a potential kind of turnaround for the labor market, then perhaps the Fed can say, okay, we can address the other side, which is that sticky inflation. And the way they would go about that is just holding rates steady for longer than we thought, and that would give a lift off to the dollar in the near term. Good movements in Euro and DXY. I don't know about good, but I mean good for me, right? Seeing somewhat of a green DXY is good for my dollar Swiss position. I think it's too early to tell, right? If we're just looking at this under a very small microscope here, you have this trend line to the downside. DXY hasn't done anything to it; it's been respecting it. It's too early to tell. If you put the fib that I was mentioning earlier, we have the it hit the 61.8, it bounced off of it, but could it very well just bounce off of this trend line and then continue lower? And then I'm dead wrong. I take a loss. And then DXY goes down to 96, 94, maybe even 95, right? No, I'm just joking. But yeah, so too early to tell on the DXY. If we break this little trend line here and we stay elevated, then that'd be good. Maybe we do get some short term dollar bullishness, but then ultimately I'd be looking for it to kind of stall out and then continue on its longer term trend, which is lower. I have a 10K FCMO account. How should I pass it? I have no idea. The only advice I could give you is trade it as if it was your own live accounts, slow and steady. Slow and steady, man. Yeah, that's the only thing I would say. Don't try to flip it. You know, trade it like as if you were, you know, professionally trading a live account, 10K of your own money. Do you consider volume profile when you look at mean reversions is something I want to try in Forex this year? Cycling Club, no, I don't. The best opportunities that I have, which I haven't had this opportunity for some time now, is when FX pairs get to these like higher time frame levels, right? Like like for example, when DXY gets like to this 100 level, that's like a time where I'm like, all right, any minute now, if the fundamentals, if the macro aligns with it, this is going to be a really good short, really good risk reward because they mean revert, right? You hit this level here, hit this level, trades lower. Then you hit this level here, it trades higher. Then you hit this level, trades lower. Hit this level, trades higher. You hit this level, didn't quite trade lower, but it retested it, and now it's like way back. It's found its way back here. So that's why I like Forex. It's really obvious when it gets to these levels, but the majority of the time, it's not at those levels. It's trading in the center, and it's just a matter of like navigating and being very, very patient. Um, yeah. Lift off the DXY? No way. So ball out. Hear me out here. All right. Hear me out. This is the dollar. If we see that labor market improve, I do think that the dollar will have some kind of a lift off. And by lift off, I don't mean past 100. Right. Let's not get ahead of ourselves here. But let's say that the 61 holds. Right. We held it here. So if you're dollar long, you're waiting for this level. Right. You hit it. If we break this downward trend line, then we can go higher. How much higher? Well, that's the question. No one really knows. If we were to put ourselves in the position of a dollar bear, which is who we're up against, then I will put the fib, same thing, high to low. And then if I'm a short seller, I'm waiting for it to get to here, to the 50 or the 61.8. So this is ultimately where I think dollar index upside could be capped. Now, what happens from there if we ever do get there? Then that's another question. Then that's a matter of what is the macro telling us at the moment? What's the bigger picture looking like, et cetera, et cetera. But yeah, so although I say dollar lift off, I don't mean up to here, but I do mean that we can get up to this level, and then it'll be a tug of war situation where bulls and bears meet, and then it's just a matter of who wins that, what the macro tells us. So what do you think, ball out? How do I manage losses? I expect losses. Losses have to happen. They have to happen. If you don't get losses, this is a true story. If you don't get losses, if you're on an insane run, naturally, as a human being, you start thinking that you're like pretty invincible, things like that, increase your size, whatever. You get somewhat reckless, and then it's really going to bite you in the butt. And then you're either going to be back to where you started or even worse. Something I've definitely struggled with early on in my trading journey. So you have to expect those losses. They're going to come. And when they do come, you want to make sure that you're not like destroying yourself. So whenever you get to a trade, you have your stop in place. You have that level in mind, whether it be a hard stop or like a stop on the chart, whatever the case is for you. And you accept that dollar value loss. So when you get in that trade, you need to be okay with being able to take that loss. And if you're not okay with that, then your position size is way too big. You should be able to like eat dinner and go to sleep, do your everyday thing without having to look at your chart every day. It's okay to look at the chart to see like if you're right and your hypothesis is right, and if you did the studying right, or that's fine. But if you're looking at the chart because the P&L is just eating you alive and you're scared of it, then the position sizing is way too big. Waiting to trade on Monday, not trading today is also a trade. Yeah, not trading is taking a trade as well. Yeah, sometimes you don't have to be in the market. For example, let's say I have no positions on, and the DXY is right here. Well, then there's so many outcomes that could happen. I'm aware of the outcomes and I'm aware of what could happen after those outcomes. But really, if I have zero trade on, I will wait for that break of the 61.8 because then it will just trade lower. Or I would wait for a break above here and then trade it back to those fibs where those short players will be at, right? Like right over here. So if I was flat, that's exactly what I would be doing. I would be taking no trade Because if you take a market order right now, then you have the two scenarios, and no one knows what those two scenarios are going to actually be. What happens. So, yeah, 100% agree. No trade is taking a position. That's like the best position you could possibly take, is taking no trade. I think I got a message here. Give me one sec, guys. No. Okay, cool. Yeah, any charts you guys want me to look at? Anything that I could help you guys with? Let's see. Let's look at the equities here. Kind of tapering off a bit intraday. Curious to see how they close out. Let's look at the metals. The metals were the big thing. No, pretty much still. When I got on the stream, silver was at 2.5. Gold also. I'm curious to see how these actually play out as well. If the metals do continue to trade lower consistently, that'll be to the benefit of the dollar. On the monthly charts for most USD pairs, Euro USD, for example, the market seems to be forming a head and shoulders pattern. Let's see. You were saying on the monthly charts. Like, are you saying inverted? Something like this? Is this what you're talking about? Shoulder neckline right here. Could be. It very much could be. And if you do get, now the thing with the euro is that they're done cutting. Euro's done cutting. Dollar is going to continue cutting. So that could definitely be to the euro's benefit. And if that happens, then that 120 handle would be the next level of kind of target there, and then beyond that as well. So and the same thing with the Aussie. So I'm curious to see if the Aussie has the same situation as well. Aussie dollar on the monthly. I'm not quite seeing it on the Aussie. Maybe I'm just, I can kind of see it on the pound as well. Let's see if the pound. Is that what it is? Yeah, I guess. Guys, I'm just drawing. New Zealand dollar, definitely not. New Zealand dollar, I would love to pick it up. I should have picked it up, but I didn't. I was afraid, and I think I was already positioned. Now I want to get too one-sided here, or too correlated in one direction. But New Zealand dollar at this level, perfect. Look at that. You got that wick lower when you got to that level. We didn't even tap into it, or technically we did, and then you just get that monster run up. That would have been a great trade. I bought New Zealand dollar like way over here as we were getting that momentum, and it actually continued with a lot of force. I remember it was like multiple candles daily, just closing green. Yeah, what a monster trade. Alan, sorry not to get convince DXY to 95. Hey man, that's respectable. No worries. No worries at all. I'm glad you gave me the opportunity though. After it gets to 95, when will we? Let's see. After it gets to 95, then we will have slight correction to stay below 100, and then off to 92. But once we get to 95, I'll evaluate. You have been pushing against 95 for months, my friend. Here's the thing with the statement ball out. You got to give a time horizon, because timing is everything in trading. So you could say DXY to 95, and then 10 years from now, it hits 95. But come on, you got to give the time horizon. That'll be the true test, right? The true test of the prediction. Because I could say go to 6,000 or 5,000. It'll happen eventually, but it's kind of like we're stating the inevitable here. Thoughts on platinum, brother? I don't really watch platinum, to be honest with you. I was holding my euro US dollar, but had to close because swaps were eating me up. Yeah, man. Yeah, the swaps. I made a YouTube short or reels, a short form. I made a short form video on carry carry trading and the benefits and the pros to it. And I definitely recommend everyone, before you get into a trade, you pull up this chart here if you have it. And if you don't have it, you should purchase it because it definitely will help you. Where are you at? Carry trade. I was just looking at it too. Carry trade scanner. This chart right here is so important. This is the reason why I'm comfortable taking that contrarian dollar Swiss long position. Um, the carry trade is a real thing. It can definitely eat at your profits. So imagine that you're in a trade for weeks, months at a time. It's flat, it's flat, it's flat, and you finally get into profit, and you're like, you know what? I'm done. Let me just collect my small profit. You collect the profit, but then you look at your transaction history and you see that you were eaten it up by swap costs, and you're actually negative on the trade. You can definitely avoid that if you just look at your carry trade and the direction of it. It'll definitely help you a lot. Carry trade for me, excuse me, I prioritize that when it comes to making trading decisions. So I try my best to just only be in trades that give me positive carry. Now, obviously, I can't be perfect, right? And there's opportunities where it's like, okay, you just kind of have to bite the bullet, or your time horizon is short enough to where it doesn't really matter at all. But if you're going to be in a long-term position, you have to be mindful of your carry trades. So in this instance here, I'm long dollar Swiss. It gets me a positive carry of 3.75. Now the broker does have a little bit of a markup, or they add a markup on that, so it's not 3.75 raw, but it's still a decent amount. And that positive carry, if I close the trade flat, I still make profit. If I close the trade at a slight loss, then perhaps the carry trade that I've accumulated offsets some of that loss, and I'm not at a loss. So definitely something you have to be mindful of. The cool thing is that this thing does all the work for you. So as we all know, interest rates change all the time. Central banks are always making moves, and so it automatically pulls that for you, and it gives you the how much you're going to earn or have to pay and the direction that you want to be in. So you don't want to be swimming against the tide in a trade, paying so much swaps after a long period of time. It's like, bro, why was I even in that trade? It was a headache that you could have avoided. Yeah, you're right. This means that the XY1095 is going to be through AUD USD longs. Pound has 2 week data. I'm just saying that Australian dollar is the most like one that makes a lot of sense for many reasons. If so, the fundamentals of Australian dollar is that it's a very risk on currency, and it does really well in risk on environments. So if you see DXY trading lower to 95, for example, then most likely equities are trading higher. So there's that inverse relationship, right? If equities are trading higher, that's risk on. AUD will also benefit from that as well. Another thing that will most likely happen is if you get DXY trading lower, then metals have a similar inverse relationship where metals will typically rise higher on that. And Aussie dollar also appreciates when metals are doing well as well. So there's like a lot of things in favor of the Aussie dollar. They're looking to hike the rates. They perform well in risk on environments. They're also a beneficiary to metal appreciation as well. So that's just like the perfect storm for Aussie dollar. Now it's just a matter of, because I'm not in the trade, I'm not in Aussie dollar, I just have to be patient for an opportunity to participate. And that could take some time. You never know if that's going to happen at all, even, right? Let's say this thing just continues trucking higher, then I miss the idea. And if that's the case, then you just have to wait for like a break and retest type situation. So let's say we never get a pullback in the Aussie dollar. You never get the pullback, then it would have to be something like this, and then you trade it higher there. But then you have to put your stops in there, and you have to be kind of strict with it as well, because you're kind of trading at the highs, the recent highs, right? The best case scenario is that you get a pullback on the Aussie dollar, you buy it here, you put your stop where it needs to be, and then you trade it higher, and it breaks retest again, right? And then you just trail that thing. That'll be the best case scenario. But because I'm not in the trade, I can't enter right here. If I enter right here, then that means that I for sure know that it's going to go higher, and I don't. That chart is going against major trends for months on many pairs. Yeah, man, it's had a lot of relative strength for sure. The Aussie and the New Zealand dollar have really shown their relative strength. You can like this today is a perfect example. Aussie dollar is trading higher. You had the euro and the pound take a hit early in the morning, and those two really did well. So you can see it here. So at the peak of it, those were the only two, the pink and the blue, the only two ones elevated. Everyone else was trading lower. Now we're getting somewhat of a everyone's kind of following suit there. They're kind of tapering off a little bit. This is just intraday, but yeah, they definitely over the past couple weeks they've really shown some really good relative strength. Yes, what a trade monster. Yeah, man. What's going on here with the equities? They're taking they were up 1%, now they're down. Um, we'll see how they finish. We'll see how they finish. Let's see here. Any other questions for me before I start wrapping up? One thing I would definitely say, guys, if you're interested in elevating your trading and stuff like that, I know everyone has New Year's resolutions, but there's definitely have to be some action behind it as well. I would recommend. I don't like to speak in definitive terms, but I will in this instance. If you guys can commit to sticking around to the live streams, and perhaps you have busy schedules, but if you can make it to perhaps one live stream a week, and if you can join the Telegram for free, free value, it's definitely free value. You don't have to pay anything. If you can do that consistently for 1 year, I can promise you that you will be in a better position than you are today. That I can promise. Definitely take advantage of it. Um, we all put a lot of time and effort into those posts, into to giving you the best possible content that we can produce. So consistently for 1 year, take those actions, join us for the live streams, join the Telegram, ask questions as well when you can. That's what we're here for. So I prefer the questions. The more questions for me, the better that I can answer in the chat. However, we can help, participate, be consistent in it, and I promise that you will be in a better position. Definitely. That's the only thing I will say. That's the only thing I will speak on definitively. When it comes to markets, you can't speak like that because no one ever knows. But I definitely know that if you do those things, you will be in a way better position than you are today. So I'll start wrapping up here, guys. S&P is trading lower. Equities are tapering off all the gains that they had during the day or before in the morning. Starting to taper off, so I'm curious to see what happens here. Dollar index sitting at this level, this downward trend line here. If we break above, then I'll look to kind of trade it higher or continue to be in the position, and then I'll be mindful of what happens once we get to these levels where the bulls or the bears will actually take part and have a chance to take it lower. So that's what I'm looking for on the DXY. If we break below this level here, which is that 61.8% retracement level, then most likely the bears have won on the dollar, and we're going to go ahead and trade it lower here. Other pairs, we still have Aussie dollar showing some relative strength, but it is starting to taper off a little bit here. I'm curious to see how the actual currencies end off on the day. Most of the currency pairs like the euro and the pound did break that upward trend line. Now they're trading lower here. If you look at the pound, it's actually pulling back a little bit there, which is interesting to see. So I'm curious to see if it's going to, a break and retest situation and continue lower, or if that was just it. So curious to see how that plays out as well. Dollar yen pulling back a little, ultimately looking to see what happens when it gets to that 157.8 level. That's when you get into those intervention territories for the Bank of Japan. So once we get to those levels, you got to navigate that very carefully as well. Dollar Swiss is my long-term contrarian play, collecting some income. My hard stop is going to be at that 7,800 level. If we break below that, then I'm going to ditch the idea, call it a day. But if I play it out and if it doesn't break below this level, then this could be one of those things where I'm in it before the actual move happens. It's a good risk to reward situation, pretty good. Dollar CAD, Canadian dollar, has showed some pretty good strength, but now we're seeing the CAD or the dollar appreciate on that dollar CAD. I'm curious to see what happens at this 3,800 level or this 1.3900. Depending on that will be the next move. If we get up to this level, and then we do see that the dollar index is actually, struggling to get past those resistance levels, then maybe dollar CAD could be actually a really, really good short opportunity as well. And that's it for this day, guys. Thank you guys so much for watching. Happy New Year's. Again, stick around for the entire year. Join the Telegram channel. You will be in a better position than you are today, 100%. Thank you, guys. Have a blessed rest of your day. Bye-bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.